Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me is Sonal Bhutra, and these are the top stories. Midcaps underperform large pairs in a seesaw trade in a largely volatile week. Banks shine, IT shows strength.
Coforge rides up on strong order inflows and an improved guidance, but emphasis slips after its surprises with a decline in revenues quarter on quarter. L&T Tech also slides after a guidance cut and revenue miss.
Hindustan Zinc slides as it's set to buy Vedanta Zinc International Business for $3 billion. The company will also pay Vedanta 5,500 crore in dividend.
PVR slips despite a better than expected third quarter. Management tells CNBC-TV18 they have seen 85% recovery compared to pre-COVID levels and are confident that advertising revenue will bounce back.
HUL slide as earnings disappoint, brokerages slash target price. The management tells CNBC-TV18 it's confident of clocking high margins over the next few quarters and optimistic of growth in its lightning business.
All right, those are the top headlines that we are tracking on Midcap Radar. And talking about midcaps, it is the Midcap index which is underperforming today. That one is down 104 points as we speak. And Nifty so far has been quite range bound. So right now, sitting with cuts of 30 points, we'll have to see which way things go because we do have a lot of earnings which continue to come in. We have Reliance Industries, that is the big number that we are watching out for. But at the day's low right now, Bank Nifty, which did surge to levels of around 350 points higher, has also come off from the highs, but it is still the outperformer in today's trading session. Good afternoon, Reema.
Hi, good afternoon. You know, despite the choppiness that we're seeing in the intraday chart, the Nifty has moved in all of a range of 75 points, right? 75 on a base of 18,000 is 0.4%, right? So despite that up and down, that it's been a very range-bound day for our market. And in the last, actually in the last 2 hours, from prior to 11:30, 10:45 or thereabout, was the high on the Nifty, and from that level, we've slipped about 45 points. It's consumption which is taking a hit for the second day in a row, as earnings are not looking great. It's Asian Paints, it was weak yesterday, it's lost another 2.5%. HUL numbers are fine, but it's the royalty which is plaguing the stock. Nestle is down 2%. So the top 3 percentage point losers on the index are from the consumption pack. But we've got a management waiting by to chat with us. Hudson Agro has delivered a mixed bag in Q3. The company's margins witnessed an expansion on a year-on-year basis, even as it contracted sequentially. R.G. Chandramogan, the chairman of Hudson Agro Products, now joins us on the show now. Afternoon, sir, and thanks so much for joining in. We were just telling our viewers your margin performance. Could you give us an indication about the pulls and pushes on the margins in the subsequent quarters? What should we expect?
Actually, our EBITDA has increased compared to last year. Actually, last year, same time, we did 162 versus 191 this year. Depreciation and interest has been higher compared to last year. That has resulted in 1 crore less profit on the PAT. Going forward, the last 3 years, we have done a lot of infrastructure investments. And we also had a dip of milk procurement due to incessant rains and lumpy skin disease. So these are becoming past. Going forward, we expect things to improve. And again, the season for ice cream and curd will be better. That is our expectation.
Margin range, sir, for us to work with? And how much have milk procurement prices gone up?
Procurement prices have gone up by almost 16% compared to last year to this year. Oh. And the increase of selling price took place in stages compared to inflation that hit. But now inflation is moderating, and probably we are not expecting any price increase on inflation, and the price is also accommodated now.
Okay. Mr. Chandramogan, two-part question here. First, when you talk about price increases that you have taken in phases so far, how much of a price hike has been done by the company in 9 months? And have you seen an impact on volumes or demand because of that? So going forward, do you expect recovery or better growth in FY24?
FY24, we expect a good growth because probably the stability has come now. Stability, once when it comes, probably the things will start improving. We expect probably the products also to play a major role like ice cream and curd, because seasonality factor has been heavily affected in last 6 months due to heavy rain, and normalcy is coming back. So we expect things to improve from this quarter.
Okay, so when you are talking about improvement, but can you tell us if volume saw a decline on a quarter-on-quarter basis or on a YY basis because of price increases?
No, price increase will also definitely will add to it. And apart from price increase, we should be able to get a marginally better effect. But it is too early to predict because we are only in the month of January. But things are looking progressive.
What was the volume growth in Q3?
Q3, we already had an EBITDA of 11
No, sir, volumes.
Volumes actually didn't increase a lot because the price increase has taken place. Now price increase has to stabilize and the volume increase will happen only this quarter as well as the
So did volumes
next
decline?
quarter.
Did volumes come down? If yes, by how much? Year on year and quarter on quarter?
No. Milk volumes have come down by about 4 to 5%.
Okay.
But this will start recovering this quarter. And the ice cream volumes and other things have already grown.
Okay. All right. So you have also approved fundraise through rights issue and QIP this time around in the quarter gone by. By when do you think you'll complete it? What kind of usage will you see because of the funds that you've been raising? Will it be capex, debt reduction? Can you tell us more details on this?
Actually, capex we have done sizably well in the last 3 years. So last 3 years, once when COVID was there, our project cost implementation were comparatively less and we were able to do it faster. Now we don't require capex infrastructure. This is mainly for debt reduction. And our 300 crores has been raised. And our debt equity ratio will already fall to less than 1:1 from tomorrow. Most probably the funds will be available from tomorrow.
Okay.
So we have not gone for QAP and we are settled with rights issue and it is already done.
Okay. So all of the money raised by the rights issue will go to bring your debt to equity below 1x and not for capex because your capex plans have largely been completed. So how much did ice creams contribute to your overall revenues and do you have a target? Because earlier you had indicated mid-teens kind of revenue contribution.
No, ice cream probably there are two brands and probably every year probably the brand contribution is increasing. Immediately I don't have the figures to say, but probably it is just increasing.
Okay. So you are talking about capex that you've already announced. You do have a couple of plants which will start commencement of production as well and they'll start contributing, so to say, from FY24 as well. How much of a total addition will you see to revenues? Will it change your margin profile as well in any way?
No, it will change the margin as well as revenue, both. But probably it is too early to say because the milk arrivals has to improve because after the rain, milk arrivals have started improving. It is too early to predict. But next year probably we can expect something like 14 to 15% growth without any difficulty.
Okay, 14 to 15% growth without any difficulty. And when you are talking about growth, will you be spending more on advertisement as well? You did see a decline this time around. That is something that led to improvement in margins as well. What is the range that you can work with?
Normally advertisement we spend about 2% of the revenue. And it will be more as a percentage for ice cream and probably less as a percentage for milk. So overall we normally spend about 2%.
How is competition? There are a lot of D2C brands which have opened up, people who are brands which are selling vegan ice cream, low-calorie ice cream. Could you give us a sense of the competitive intensity in the market?
See, we are mainly focused with dairy fat ice cream and we don't even just go for vegetable fat ice cream and all that. Vegan and all that is very limited market and a limited niche and we are focused on dairy fat ice cream.
Okay. All right, Mr. Chandramohan, it was a pleasure speaking with you, sir. Thank you so much for joining us and taking us through quarter through performance and the outlook going forward as well. That's the word coming in from Hudson Agro Products. The stock has recovered a tad bit from the lows, but still down 1.5% in trade right now. Slip into a short break. Up next, we'll be joined by Pawan Khaitan, who's the Vice Chairman and Managing Director at Quantum Papers to discuss their quarter 3 earnings. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. As promised, let's invite the next corporate on our show, Quantum Papers. The company posted healthy growth in revenue and margins in the third quarter with a massive increase in profit on a year-on-year basis. It has approved nearly 290 crore worth of capex to scale up its paper plant and mill and for sustainability initiatives as well. To discuss this and a lot more, we are now joined by the management, Mr. Pawan Khaitan, who's the Vice Chairman and Managing Director at the company. Mr. Khaitan, good afternoon. Thank you so much for joining us here today. Well, it looks like a very strong performance in quarter three. Can you tell us what were the realizations, average realizations in quarter three? And so far, quarter four, how have prices been? Did you see an increase because of China reopening? Did that have any impact on global prices?
So our current quarter, last quarter prices have stabilized at about 90,000 rupees per ton, which was an increase from 86, which we achieved in the September quarter. So we are quite facing a healthy return on our prices. We are stabilized at these levels. And going forward, I think we are looking at this price at a balanced level of about 89, 90,000 based on our market penetration and the ability to pick up orders from the market.
So,
yeah.
Go ahead. So you're saying the price increase was from 86 to 90,000, right?
Yes. Yes.
Okay, got that. Could you give us an indication of what the volumes were and some more color on the volumes that you've seen and going ahead, what we could expect?
So our volumes are at 100%. We are operating at 100% capacity. We are doing about 38,000 tons every quarter. And we would be closing the year at 100% capacity level. Going forward with the capex plan that we have envisaged and planned now, we are hoping to release about 25% of volume growth in the coming year. And from the 150,000 tons, which we will achieve in this year, we hope to touch about 2 lakh tons in the succeeding 1 to 2 years.
So for FY24, you're looking at volumes of around 2 lakh tons. This year, it'll be around 1.5 lakh tons is what you're telling us.
Well, next year we should be about 1,80,000 because part of the project will be implemented during the year. But 24, 25, yes, we should touch 2 lakh tons.
Okay. So this new capex that you have announced, is it only for modernization or will you be adding any volumes here? And can you split it up for us? So, because there is some capex going into environment and sustainability as well, how are you going to be funding it?
Well, with the healthy cash accruals that we are generating, I am looking at doing all this within internal accruals. At the moment, we are not looking at any kind of bank exposure or furthering it. And if I break down the capex, about 150 crores will be in plant and machinery addition, which will help release and grow my volumes by 25% as indicated. And balance about 100 crores will be in reducing my cost of energy. And about 20 crores would be in environment and sustainability initiatives, which would be from upgrading my ETP and growing my social forestry footprint.
So how much of an energy cost saving are you looking at on a quarterly basis?
My energy costs should come down by about 20%.
20%.
Okay. So then FY24 margins, what could they look like?
Well, I have already touched an EBITDA margin of about 30%
Correct.
this quarter. And I think going forward, I am targeting at about 33% EBITDA for the next financial year.
Okay. So when you talk about 33% EBITDA margins, what will it be led by? One, of course, your revenues will go higher because of higher volumes. But specialty papers, that is something that will also contribute higher. How much higher are the margins in this particular segment?
My specialty paper helps contribute about 5% more than my normal writing and printing paper. But the volume growth there is, we are doing about 15% of our production from specialty paper because by virtue of its product profile, it's low volume, high margin. So that will go up to about 16 or 7%, not too much growth there. The main growth is going to come from writing, printing paper. And yes, we are looking at growing our coated varieties as well. So a slight shift would be there, but most of this EBITDA margin increase would come from fair bit from cost cutting as well on my energy.
Which quarter will your enhanced capacity and that modernization plan come on stream?
So we have 4 machines and it is going to happen in phases.
Okay.
On my smaller 2 machines, they should come on stream by about August of next year. That will release about 50 tons per day enhancement. And the balance will come at the end of the financial year. So the effect of that entire benefit we will see in the financial year 24-25.
All right, Mr. Khaitan, we take that point. Thank you so much for joining us today and giving us what the outlook is looking like. So strong commentary coming in from Quantum Papers. The stock is up 1% in trade. They are looking at 33% margins in FY24 versus 30% that they've done in this quarter itself. With that, we'll slip into a short break. And as we do that, here is an important information for our viewers. Don't miss out on the 19 must-have stocks for 2023. Subscribe to Money Control Pro to get the full list. Welcome back. Well, Midcap Index is the one which is not doing so well. But if we talk about the broader markets, Aether Industries is the stock on my radar, which is doing well in a market where Midcap Index is not doing so well. So reported numbers a while back, and they were good numbers. So on a YOY and on a quarter-on-quarter basis, both the company has seen a revenue growth, has seen a margin growth as well to come in at 28%. And this is something that has aided bottom line as well. Profits are up 38% on a YOY basis and up 30% on a quarter-on-quarter basis. Of course, lower tax rate is something that has aided the volumes, the profits as well. The company says demand for products which saw a decline in first half has improved in the third quarter, and they expect it to continue. Their high margin CRAMS business has also shown a significant uptrend as well, and their Site 3 facility will be operational from Jan 2023 as well, which will aid to volumes and profitability in the coming quarters as well. They are looking at growth in coming quarters, so that of course is working well for the stock, higher by 2% in trade after a weak quarter two. With that, we'll take your leave on this edition of Midcap Radar, but stay tuned. What the market wants from Budget 2023 will come when we return.
Co-powered by Century Ply, आग से बचाए.